All right, so let's have a little bit of fun talking about Collateral. The
Woohoo.
Everything bubble was also in this titling, and we were kind of standing backstage, and we said, I don't know why the Everything bubble's kind of tied into the Collateral, but we'll see where this goes. So just wanted to start off, so we have Rena and Aaron here. This past year, I think everybody can agree, has just been a master class, maybe a doctorate level class in collateral and counterparty risk. So if you guys were going to recap the last year from your perspective, from the companies that you guys work with, how would you just characterize the master class that we got in collateral and counterparty risk?
Well, I would describe the last year as a bit of a dumpster fire. That's probably a good place to start. There have been a lot of lessons. There have been a lot of lessons about the importance of well-qualified custodians. There's been a lot of important lessons about how those assets need to be treated. We are a custody custodian. We work with Anchorage Digital, who handles all of those needs for us. One of the big benefits of working with those guys is that they're bankruptcy remote, so we know those assets are safe and guaranteed. So in the event of them going bankrupt, there's no issue like there was with Celsius or BlockFi. There's no big clawback or long, drawn-out legal process. And so I think the biggest lesson is you need to know who's holding your assets. Self-custody is great. Qualified custodians are great as well. Everyone kind of gets to pick their own poison.
I think for us, it's like the choose your adventure strategy from what occurred last year. We're pretty bullish on self-custody and like the rights to having an open and transparent system. We're clearly building a DeFi app that is fully on-chain on Bitcoin, leading into Bitcoin security. All I would say is that I came from a centralized exchange, so I do know like what the other side is, but I still feel very passionate on the idea of you can still custody yourself if you have like the right educational resources to do so, and that is like an avenue you can take. I like working with custodians too. I think they're fun. I've probably used custodians for my personal life, but I think there's like the idea of you can do both, but you just have to like really know who you're working with.
One of the largest challenges that I think people who did put their Bitcoin into some of these platforms and had these exchanges blow up, they just didn't really understand how funds were being commingled. And traditional investment, some of them were over-collateralized, a lot weren't, and all of that was being mixed together in this corporate centralized architecture that people were being compensated 4% or 6%, and the risk was probably, you probably needed like 50% return or even higher to even step into something like that. So moving forward in like the coming year, how do you guys think through the education, the responsibility of education from the institution standpoint to the customers, especially as you still have retail and institutions that are probably going to be tried to be mixed together moving forward, which I hope isn't the case, but I'm curious on your thoughts on some of that.
Well, I'm a big fan of reading risk disclosures. It's not fun to do, but we built Moon Mortgage because there wasn't a good solution for us out there. We actually, for better or worse, read everyone's risk disclosure. Before we wrote a line of code or hired a lawyer, we read through everything ourselves. We understood the problems. And I'll never say we directly predicted the downfall of these centralized lenders, but we were far from surprised when it happened. Even Gemini earned. And so we set out to build a product that could obviously learn from those mistakes and put some of that power back in the hands of the consumer. And so we just rolled out something called a trade and borrow product. It's essentially the world's first crypto loan margin account. So picture a Coinbase account that you can borrow cash against. We support Bitcoin, ETH, a slew of other assets. You get to borrow against the total portfolio value, cash out, can do whatever you want with it. And most importantly, you get to maintain the ability to trade that underlying asset. So you can go from Bitcoin to cash. You can go from ETH to wherever else you want to. And this gives the user the ability to ultimately manage their own risk and their own risk tolerance. The best part about it, though, is because we generate trading fees, we don't rehypothecate those assets on the back end. So like, there is a viable path to safe collateralized lending. You just have to be willing to, find it and educate the customer on the benefits.
I think with all of the challenges of like the previous year, the one thing that stands out to me is like, if you don't understand where the yield is coming from, you likely are the yield. Looking at under the hood of each protocol, looking at like how they're doing the emission curves and like supplying the yield for said incentives or like liquidity mining, I think that's important to really dig into. We are building a DeFi app that's similar to your product, I'd say. Bitcoin is used as an over-collateralized asset, and you can directly borrow a stable coin, but we're doing everything through native Bitcoin on the L2. The reason why we're doing is that you don't have easy access to stable coins with your Bitcoin as collateral. Not everyone's willing to accept it, but it is the most liquid asset in crypto. It is the most decentralized asset. The way we want to kind of think about this is that you can have everything on Bitcoin as like final settlement, but the layers are where you're going to scale it. And for DeFi, it's really important because we're thinking, how do I serve emerging markets to have access to capital where they're generally underserved, but with Bitcoin? Because right now, 4% of the world owns Bitcoin.
When we talk about DeFi, I think like a hardcore Bitcoiner sitting in here is going to say, well, it all comes back to the Oracle problem of, if you have to reference some exchange rate and you're still doing that on Bitcoin, there's still going to be risk. So for people that are sitting in here and, we're at a Bitcoin conference, how would you address that person who's still skeptical of DeFi? They're seeing things that are being built on top of Bitcoin. I mean, the last 3 months, 4 months has just been an explosion of engineering that's happening on Bitcoin that was never happening before. And I think there's a lot of people that are very skeptical. So how would you kind of address that person and maybe their concerns?
I think their concerns are valid. There isn't an Oracle like natively right now. You can use Oracle integrations through like Chainlink or Redstone or whomever you choose, but there are layers that have native read ability and write ability to the Bitcoin blockchain. Stacks is one of the layers. RSK also has that ability through EVM. When you have access to read the Bitcoin blockchain directly, you don't need an Oracle.
Aaron?
I don't have a whole lot to add on that one.
Okay. So Aaron, what's something that you're really passionate about when it comes to the mortgage space? Because you're looking at it from a different lens than most people. Is there a pet peeve or something that you're like, I just wish people could understand this thing, or because you're so close to it and you're coming with just a different lens than anyone else?
Yeah, so most of us have been involved in Bitcoin for a long time, and we love holding it, and ideally it would be great to safely get leverage out of that. From the beginning, we wanted to find a way to basically dual collateralize the Bitcoin with real estate to give folks, that golden ticket where they can safely leverage their Bitcoin to invest in real estate, purchase cash flowing properties, and kind of begin to hack the greater wealth system. Real estate historically has been the greatest wealth creation tool. In this newer era, I think Bitcoin is the next greatest wealth creation tool. And woo. And so what I want people to understand is that, again, you can safely utilize your Bitcoin to buy something like real estate and unlock a whole new world of possibilities. And, from my perspective, this brings utility back to Bitcoin. This gives you something real and tangible you can do with it. One of the reasons I always loved investing in real estate was, worst case scenario, I could move in and live there if I needed to. It's real, and this makes Bitcoin that much more real.
Rena, same to you, but with trust machines, is there anything that you think people are missing with respect to what you guys are doing over there that you would like to highlight or just kind of explain your vantage point to them?
Yeah, so we are a Bitcoin products company. We're filling the gap on building a lot of different products that actually give Bitcoin utility in real use. And We're challenging the norm that Bitcoin is a store of value, but it also could be a productive asset. There's 500 billion in Bitcoin capital that is waiting to be deployed in smart contracts. For us, what's important is to think about like the application layers for Bitcoin going forward. We're kind of in this like Bitcoin thesis of you have buyers, holders, miners, and that's it. If we want Bitcoin to stay around and actually continue to be a store of value for longer term after the halving and after mining becomes a little bit obsolete, you have to create that flywheel economy for Bitcoin. ETH has already done it, and you have layers on ETH, you have stable coins and all of these things that create real world asset value to Ether and then the Ethereum blockchain. I'm almost floored that no one chooses to use the Bitcoin blockchain for anything except for hold my money, thank you. But there's more you can do. You can deploy for your loans. You could deploy, I guess, in ordinals or something like that. But what I'm trying to get at is that if you don't build real tangible products and create that transaction fee economy for Bitcoin, we're kind of at a loss in like 50 years.
So when we think about people that would maybe put something into custody, I think most want to just be able to at least retain a key, or when we're really talking about custody and whether you're retaining the keys or you're trusting somebody else to hold the keys. And after everything we've seen in the last year, it seems like the pendulum, I would like to think the pendulum is swinging in a direction that people are really understanding the implications of outsourcing such a thing, security-wise, and just as we go down that path and you look to the future, do you think the incentives for folks are to continue to just outsource this and we're going to repeat history again, or is there a major lesson that really popped out of this that's going to stick within the community moving forward?
We need both. You should be able to self-custody your own Bitcoin. You should have that competency. It's the point of Bitcoin. But in order for Bitcoin to get to that next step, it still needs to integrate with the traditional financial sector. And that's only going to happen through, qualified custodians. We need that piece as well. I don't think it's a one-size-fits-all sort of piece by any means. I think what you're working on with the layer 2s and not having to wrap Bitcoin to interact with DeFi is also going to be a huge game changer for the space, but we really got to have both.
So you're a firm believer in free and open markets and let the market decide. And I kind of hit at this earlier. It's how in the world can we make sure that people are educated in the next go around with respect to the risks? Or is that also a free and open market and they just got to figure it out the hard way if they're not performing those types of actions? How do you guys think through it? Is it part of the company's responsibility to have risk disclosures that maybe go above and beyond what's required by, current regulations? How do you guys think through that?
I mean, I think it's the right thing to do. It's the approach we've taken. We try to be as future-proof as we can. We are incredibly transparent. We encourage you to read the docs. We have summaries of the lending agreements as well. But again, I think this fits into that, different products for different folks sort of things. You can come to us and worry a little bit less about how everything else works. So we're, very grandma friendly. Or you can choose that self-custody path and, become more educated. I think we're kind of like the gateway drug, and then, maybe they end up on your platform.
Like you're the first step and then I'm the end.
Yeah, who knows, something like that.
Inscriptions, Rena, what are your thoughts?
How do we want to take this?
Any way you want.
I find inscriptions to be interesting. So for anyone who doesn't know, basically you can create a Bitcoin NFT and ascribe it to like every individual unit of Satoshi. So you have a tracking mechanism. Most people are putting pictures or however you want to take it, like memes on the internet. But I have seen like actual utility with ordinals more so than other styles of NFTs. So the difference between a Bitcoin NFT via ordinal versus like an ETH NFT is the metadata is inscribed within the chain. So long as one Bitcoin node is running, it's immutable and it will continue to live forever. I'm using ordinals for like a more different personal use case. I had a family member pass in the last year, and I've inscribed every voicemail that I've had from that family member so it lives on chain forever, because I don't want something to be beholden to iCloud or something centralized or pointing to an IPFS file. I want something to be secure and high value. People always think of high value as like dollar value, but emotional value is a different style of value. And if I think about what can exist 100 years from now, Bitcoin will exist 100 years from now, so long as one person runs the node. So like, yes, ordinals are fun and meme and jokes right now, but you could do something powerful with them.
Yeah. When you think about, oh, hold on, I lost my train of thought. Sorry about that. No, I wanted to go in the direction for you with respect to collateralization in the lending market. Peer-to-peer lending versus what seems to be more of a turnkey solution that I think most people are just like, all right, I just want to be able to do this really simply. I don't want to have to go find a person point to point in order to do lending. But when we think about the risk, and you think about if you and I engage into a contract with each other, it's so much easier for me to truly understand inherently what my risk is by going peer-to-peer, because I know you're the person on the other side of it. Do you see peer-to-peer lending being something that materializes 5, 10 years from now as maybe the preferred choice because it's de-risk and you actually know what the risk is associated with your counterparty? Or do you think that society is going to continue to be looking for turnkey type solutions, and it's just going to be kind of consolidated into larger buckets that are maybe over collateralized and not being commingled with under collateralized loans?
It's a really good question. So I think peer-to-peer certainly has a place, but there's, again, a higher barrier to entry, right? Like in crypto and Bitcoin, we still have not solved that UI, UX issue. It's what's holding us back. Our approach was to build something clean, easy to use, and seamless. And again, this might be the gateway drug to a peer-to-peer system or to anything else, but like, we got that problem to solve first. So I think all will exist. You know, a centralized player is always going to have better liquidity. They're always going to have better rates. You can tap into institutional players a little bit more easily than you could in a peer-to-peer way or pure DeFi. I mean, if you look at DeFi volumes, they're scary low right now. Like 5% of all of the transaction volumes are occurring on DeFi. The rest is still centralized. So certainly have a long way to go. I think that'll be a piece of the market. And hopefully, you know, we can help everyone transition over to it eventually. I think it's a cool thing to exist, but I certainly don't see the CeFi space going away.
I think the way you phrased like counterparty risk and like knowing who on the other side is, I would say like DeFi offers that even more. At least all of our contracts are open source. You can read them, you can see all the loan terms, and you know, you can actually track when you're, let's say, borrowing Bitcoin, you can track it on chain of how it's being spent or how it's being used. So like, there's like knowing who's on the other side of the loan personally, but then there's knowing who's on the other side of the loan from like a technical standpoint too.
Rena, you have experience in the energy space. I was doing an interview with Harry Suddock, and I said, Harry, why can't these energy companies, why can't they wrap their head around mining and how it's acting like a dampener to them as they're on the grid and making the grid more robust, and they're a buyer of last resort. And he said, it's really easy. Like, they're sitting on this thing that has 70% annual volatility, and they're not getting paid back. The mining company or the energy company is not getting paid back for 60 to 90 days. And they see that as a lot of risk because they don't know if they're going out there and speculating with Bitcoin and everything else. From a collateralization standpoint, do you see Lightning that can immediately settle, or some type of application really solving that for the energy company, because they're just seeing that as volatility risk on the underlying? Is there something that we can do in an immediately settling kind of way that would solve that?
Yeah, I'm glad you're bringing this up. So I actually got into Bitcoin while working on an oil rig offshore, and that's actually how I started mining, because I'm like, hey, free electricity, let me do something with it. But yeah, there are different ways you could take this for allowing the volatility risk to be mitigated per se from like an energy mining perspective. I would consider opening a Lightning channel and like trading it out immediately, but Lightning still has quite a bit to go. I think the last couple of weeks, like the Lightning Network got flooded to like run these channels and route this way. Like it is possible, but you also have to have like the right liquidity for it, and it's like a bit tough to maintain that. I think an alternate approach is to having a Bitcoin that can be swapped into a Bitcoin on the L2. So like we have Bitcoin right now, but then to be able to take it to the L2 and like use that immediately and actually have use. Like deploy it now versus like holding and trying to figure out trading.
The high fees that are happening right now is a really hot topic. Do you guys see this as a good thing for L2 development or distraction, short-term interest, not really that big of a deal? You think it's going to sort itself out in a year from now? What are some of your thoughts in the fee side?
I think it'll largely sort itself out. I mean, we kind of see this play out on Ethereum. We know how this will likely settle. And again, hopefully things get shifted over to a layer 2, and that just becomes another part of the solution.
I personally don't mind the high fees. I'm glad to see people running Bitcoin nodes who hadn't been running them in quite some time. Yes, I think we're going to move over to the L2s at one point. There's a few Bitcoin L2s, more are probably needed on the market. But this is the first time miners are actually earning an alternate revenue stream of not just mining, but to validate the transactions in the blocks. And they're earning more from that than actual mining. So it's like actually creating like a robust Bitcoin economy. Like Bitcoin is now competitive.
Yeah. All right. Closing thoughts. Anything that you want the audience to walk away with in particular to Collateral, or anything even outside of that realm that you guys are passionate about? Aaron, we'll throw it over to you first.
Come back to me.
Okay, Rena, we'll throw it over to you first.
Sure. My closing thoughts are Bitcoin can be more than a store of value. Bitcoin can be productive. You can build on Bitcoin. I know a lot of people challenge this norm, but I think for Bitcoin to stay competitive, we have to continue to innovate on it. It's a little bit sad that all Bitcoin innovation for the last some periods of time have only been the last few months, and for decades we left Bitcoin untouched, but it's time to rebuild and build on the L2s for Bitcoin.
Cool. I think my closing remarks are on the subject of collateralized lending are just you have to know your counterparties as best as you can. There are safe ways to do it. I'd love to see more folks beginning to explore, again, leveraging Bitcoin for investing in real estate and changing their long-term wealth opportunities through that mechanism. We need more utility in Bitcoin, and however we get there, I think, is ultimately best for the industry.
Fantastic. I don't know if I'm allowed to have an opinion, but I'm going to give you one as the moderator. So often when you step into borrowing and lending collateral, you're quoted a yield for lending it out. And that yield could be 4%, that yield could be 20%, it could be whatever number. And just because that's the yield that you're being offered doesn't mean that it's actually right or that that's what you should take. You have to come up with what you think that risk is worth to you. And if it doesn't meet that threshold, well, then you probably shouldn't give away your Bitcoin, because it's precious, very precious stuff, and you need to watch it like a hawk. So, all right. That was fun, guys.
Yeah, thank you.
Anything else? You guys good? Good to go? All right. Thank you, guys.
Thanks, everyone.
Thank you.
Thank you, Miami, for the last 3 years in this amazing city. The whole world shut down, but Miami welcomed us with open arms. We want to show Bitcoin to the whole world. We are taking the conference on the road to set the stage for Bitcoin in a new city. Nashville. Bitcoin 2024 is coming to Nashville in Tennessee, a city that is known as a music and freedom city. Bitcoin 2024 in Nashville from July 25th to 27th.